Okay, so I'd just like to welcome everybody this morning to our K-Club session on funding, and particularly the CBILS Coronavirus Business Interruption Loan Scheme. And we've got two experts today who are going to share some information about the scheme and give some information about key dates and what you need to do. So we've got Sue Barnard from the British Business Bank, and we have Carol Bolland from FW Capital. So I'm going to kick off by asking Sue just to run through a bit of background about the scheme and obviously funding available. And I'm going to share my screen, fingers crossed. Okay, which is here.
Okay, good morning everyone, and thanks Amanda and the K-Club Network for inviting me along to speak this morning. I'm Sue Barnard, Senior Manager for the North West for the British Business Bank, and I've been with the bank for just over 4 years. Previously worked quite closely on the Northern Powerhouse Investment Fund, but over the last 12-18 months I've been part of a wider group within the bank called the UK Network Team, where we now have a Senior Manager in each region, raising the profile of SME finance across the UK. Next slide, please. So the British Business Bank, I think probably 4 months ago, there was probably limited knowledge of the British Business Bank. One of our main objectives going forward was to raise the profile of the bank, but also the different types of finance that are available to SMEs across the UK. So we were created in 2014 to actually encourage more SMEs to take on finance to help them grow, but also to work with more commercial partners so that we could get more SME finance out into the marketplace. And what we wanted to do is try and ensure that there was a range of alternative finance, so not just your traditional lending. So a number of different programs have been developed over the last 5 years. And we now work with actually probably around about 160 partners, because we've onboarded around about 50 to 60 partners over the last 4 months due to the current crisis. So our main aim is to improve finance markets for smaller business and help them work more effectively. And one of the things we want to do is to ensure that there's more finance available and more SMEs outside of the south taking on investment. Because what we've seen with a number of our programs have actually attracted a lot of interest, but mainly in the south. So one of our objectives going forward is to ensure that businesses are aware of the different types of finance. And as you can see on this slide, there's a range of different subsidiaries that sit within the British Business Bank. So some of you may have come across British Business Investments or Patient Capital. One of our main brands, Startup Loans, which is also a subsidiary of the bank. And more recently, over the last 3 years, we've launched a number of regional funds across the UK. Next slide, please. Just to give you an idea of some of the different programs, because there's quite a few that we're working on. So for startups, our main program is around startup loans, and then we move on to scale-up businesses, and we have a range of different equity programs aimed at high-growth businesses across the UK, and then staying ahead, a number of investment programs, enable programs, and as you can see, Enterprise Finance Guarantee, which going forward I'll talk about in more detail, because that's now been sort of overtaken by Coronavirus Business Interruption Loan Scheme. And as I said, we're very focused on regions now, so there's a big push to get the regional funds out across the regions. And our main focus is to try and encourage more in business investment, growth and jobs. Obviously at the moment, one of our main objectives is to ensure sustainability across the current SME markets. Next slide, please. So today I've really been asked to speak about the different COVID-19 guarantee schemes. 4 months ago I was asked to join a team within the bank to actually look at how we can try and get more lenders into this scheme, because when the Chancellor announced that we needed to get more finance out to the market, we knew we needed more lenders to actually deliver some of these government guarantee schemes that have been put in place. So the last 4 months I've worked with a number of partners, online platforms, banks, ensuring that they have the guarantees in place that enables them to actually lend to businesses in the current crisis. These were last week's figures, so they've already increased again. They increase week by week, but currently we're around about £46 billion which has been deployed just across these 3 funds to just over 1.1 million SMEs across the UK. The bounce back loan is aimed at the smaller businesses, and it's available it's quite a quick process if you have a lender that is a current bounce back loan provider. And finance available from 2 to 50,000 is available. One of the things I want to focus on, and I'm not going to go into a lot of detail because there's a lot of detail on our frequently asked questions on all of these schemes, is I want people to focus on deadlines, because we are coming up to nearly August. The bounce back loan finishes on the 4th of November. So again, if you were thinking that you may need some short-term finance, up to 50k, I would encourage you to look at this scheme, but what I would also encourage you to do is to think longer term on how much you may need, because what we've come across is that when the scheme went live, a number of businesses applied quite quickly without actually looking into how much they potentially need for different scenarios depending on what pans out in the future. So we've had some SMEs that have applied for sort of £10,000–20,000 and have now realised that they actually probably should have had 50,000. But unfortunately, there's a one chance opportunity for bounce back loans. You can only apply once. So do think out your long-term plans if you were thinking about a bounce back loan. There's also been a lot of noise around some SMEs who can't access the loan because the lender is not a bounce back loan provider. Again, we're onboarding lenders as we speak who will do non-customers, and I know some of our current lenders, now they've got through the high volumes of their current customers, they will look to do new clients going forward. So it's a very good scheme, quite quick turnaround, self-certification, so it is something to think about going forward. I'm going to touch on the Coronavirus Business Interruption Loan Scheme, which previously, very similar to the Enterprise Finance Guarantee Scheme, and that's why we was ready to actually go to market with this product literally over a weekend, because we already had a number of lenders already delivering EFG that we could switch to, as we call it. We have onboarded a number of new lenders as well, and I know Carol's going to talk shortly because she's one of our new lenders at FW Capital. And we needed more lenders because we needed to get more important finance out into the market. So this is aimed at smaller businesses again, SMEs, which you can apply up to £5 million. This scheme is up to £250,000. We don't ask for personal guarantees on this one, but I'm not going to go into a lot of detail because I know Carol is going to touch on it. But what I would say is, again, frequently asked questions on this one, and there are a lot of questions and a lot of queries on this one because it is slightly different, because you can apply for more than one CBILS and you can apply to different lenders as long as you've not gone up to the maximum facility. And what we found with this as well is a lot of customers now are saying, well, actually I do need more investment, so I need to look, because I did at the beginning, as everyone did, very nervous, quick to apply, and again probably didn't think about potentially what could happen later in the future. So again, it's something to look at the frequently asked questions. CBILS is the Coronavirus Business Interruption Loan Scheme for large businesses. So this is, your very large businesses looking for 50 million up to £2 million. So smaller numbers that we've supported so far. And again, we've just onboarded a new lender again to look at their client base. So that is, smaller numbers and also smaller amounts going out in total. Next slide, please. Finally, I want to finish on Future Fund. And also what I should say is Future Fund and CBILS, the deadline is the 30th of September, which isn't far away at all. Now, we may get an extension, but we just don't know, and we probably won't know till August. So that's why we're encouraging people to think now, because if there is no extension to these schemes, you won't be able to apply, and you need to start planning now, because it can take some time if you're not your financial proposition isn't ready and it needs a lot of work. So we do encourage companies to look now. And I want to focus on Future Fund as well, because when this fund was launched 2 months ago, it's one of our later programs. It sort of went out with sort of headlines of 500 million available. So I think when people have started to see, oh, there's already 400 and that figure has gone up, I think it's 449 million now, has already been allocated. I think some businesses are thinking, oh, I've missed my opportunity. This fund is very much still available, and we have no limit now. We can go over 500 million if needed. So if we have more applications that are good enough for this fund, then we would encourage people to look at the future fund. And this is for the businesses that probably aren't ready to take on the debt, but quite high growth, maybe, you know, equity type, because this is a convertible loan, very investor led. So the SME needs to have an investor already on board who leads the sort of application process. But we just wanted to get over that. This fund is very much still open for business. But as I said, it does come with deadlines, and that's something we really want people to think about now because time is going quite quickly. Next slide, I think that was the last one. Yeah, so disclaimer there, obviously about the British Business Bank. There's lots of other programs available. We are still deploying capital into the market through a range of other funds for high growth businesses. We are seeing a lot of businesses who can take on our other products. But obviously, as you can imagine, the government-backed COVID-19 programs are the ones that are very much working at the moment. And as I said, concentrate on deadlines. Thank you.
Thanks very much for that, Sue. It was really useful. Are we all back? Marvellous, fantastic. So Carol, do you want to follow on straight away?
I will do, yeah. Okay, so I'm Carol Bolland from FW Capital. And I've been working there 10 years, and previously we delivered the Northwest Fund. And then, as Sue said, 3 years ago was appointed to run the Northern Powerhouse Investment Fund debt finance across the Northwest and Tees Valley. So as well as still being business as usual and open for growth funding applications, at the end of June, we were accredited to become one of the CBILS loan providers. And within days of going live, we delivered monies into businesses. And at the moment, I think we're just sitting on £7 million out in 4 weeks with a strong pipeline of inquiries currently being processed. And that's not only to our existing clients who are in our portfolio, but to brand new clients to FW Capital. So we're one of the lenders that are looking at the whole of the market. I think it's worth mentioning that for both CBILS and the Business as Usual Growth Fund, we can now look at business to consumer businesses, either online or traditional retail sectors, which previously we hadn't been able to do. So CBILS, yeah, British Business Bank have set some key criteria that the business has got to be based in the UK for its business activity, and there are a few excluded sectors, but not many. The business has to have turnover up to £45 million and have 250 staff as a maximum. There are ways of looking at those numbers over the last couple of years to still be eligible, but they're the key headlines. They have to confirm that they were viable before the current pandemic. So again, profitable, would be able to service a loan, and they have to self-certify that they have been impacted by COVID-19. And also that as at the end of December, they weren't an undertaking in difficulty. And again, all the criteria for that is on the British Business website, and it will actually be expanded out from the end of July to include more businesses that might have a negative balance sheet, but if they have less than 50 staff and a balance sheet and turnover less than 10 million euros, they won't be subject to that test. So again, it opens it up to even more businesses.
That's from the 30th of July, isn't it?
Sorry, 30th of July, yeah. Sorry, yeah.
It's the end of July.
Yeah,
yeah.
Next week. So for FW Capital, we've got certain criteria. So our loans will start at £100,000 and go up to £750,000 because that's how the fund was structured. So although CBILS can go up to 5 million, our parameters are 100,000 of loan to £750,000. The company has to be based in the north of England, excluding Newcastle because they have their own scheme set up as a standalone. And it can be used for working capital, just ongoing capital. So previously it was just growth capital, but now the parameters have been changed on that. It's working capital or assets or investments in the company to take it forward, but we can't refinance any existing lending facilities or other bounce back loan or CBILS facilities. Within the scheme, the UK government will meet the initial 12 months interest costs of the lender and also any arrangement fees. And that's subject to the borrower accepting the government's offer of a business interruption payment scheme. So they sign a document to the government and the government pays their interest and fees for the initial 12 months, which again makes it quite attractive. So if they're looking at our loans, we will put them out over a 5-year maximum term with an automatic 6-month capital repayment holiday and a fixed interest rate that is bespoke to each loan that we look at. And again, is lower than what we normally charge at because we've got the guarantee from the British Business Bank to ourselves if in the case of a default. So as Sue mentioned, up to 250,000, there is no requirement for a personal guarantee from the directors. Above 250,000, it is at the lender's discretion whether they take a PG and or debentures or any other security. So each lender will have different criteria above the main criteria. If we are looking at a personal guarantee, it will be 20% of the loan amount maximum. And the directors have got to realise that their primary principal residence will not be included in their asset base. So they're not pledging their homes even if they provide a PG. And I think what they've got to be aware of is to make sure that they're not breaching any of their terms of any existing facilities that they have. Whereas some lenders put into the small print that if you're taking on additional finance, you've got to get consent before you do it. I would always check that businesses look at their own existing loans that they've currently got to make sure they're not going to breach. So for businesses, some pointers. There are obviously companies impacted from day one, and as Sue said, a lot of them will have just jumped onto a scheme, taken an amount, and now 4 months later are thinking it's not enough. With CBILS, that's fine, you can buy from another loan. The bounce back loan scheme, if they were looking for higher than they wanted and it was taking them into the CBILS range, which is £50,000 and £1, they can go to a CBILS lender and they may refinance the bounce back loan. Unfortunately, we can't, but other lenders can. Or we've seen where, again, as Sue's saying, think about what might happen. Businesses may have been cash rich at the start of the pandemic and as lockdown came, but over the last few months, their reserves have reduced. And as the CBILS scheme is due to finish at the end of September, they really do need to think about what the future impact could be of the business being locked down, not trading, local lockdowns, the lack of business development in the last few months, how that's going to affect their pipeline going forward. So they might be finishing work that they had prior to lockdown and they're using their cash, but there might become a pinch point where that suddenly stops and then they've got to get through the next few months. So that's one thing to look at. I've also looked at a number of businesses that have been denied CBILS by their own bank for various reasons, and that's normally to do with the bank's internal credit requirements, multiples of EBITDA to debt servicing, existing levels of facilities, lack of security available above the 250 threshold. And sometimes businesses with no specific relationship manager, you know, they're in a mass marketing situation on the end of a phone to a call center, and it might take up to 12 weeks to get an answer. And at that stage, the answer might still be no. Unfortunately, we can't assist. We've looked at those businesses and funded them. So, you know, we're trying to be as proactive as we can and helping the businesses through. Yes, they do have to meet certain criteria, but, you know, it's not, if you've been declined from your bank, you're automatically going to get a decline from another lender. So look around. And to improve your chances of success, firstly, check the British Business Bank and UK government general eligibility. Make sure that you can apply for either of the schemes. And then understand that each lender will have their own internal credit policies to follow, and there isn't a one size fits all. What we say is, if you think you need funding, speak to us. We can normally tell you, do you fit our criteria quite quickly? You can have more than one CBILS facility. And then make sure that you've got a level of information that any lender will require, and that's your historic accounts. Management accounts, some sort of business narrative. Don't just say, we need some money to see us through. Tell us about what the business does, the performance pre-COVID, the impact of COVID. You know, we understand that you may not have had any sales for the last few months. What have you done to try and improve your cash retention with overheads, job retention scheme, HMRC schemes? You know, how have you been proactive yourself in trying to get through the period? And then probably most important, the management experience, who you are, what you are, and how long you've been running your business and your commitment to that company. And then it's a case of going through a process. You know, we will have a look at initial eligibility, take it through, then apply on a formal basis through an application. It's not a lengthy, drawn out process. We're trying to shift these through as quickly as we can. We've got to do our own due diligence on the businesses, make sure that if we're providing a loan, that pre-COVID they were viable, they would have been able to pay the loan, and then set in structures of repayments that we think the business is going to be able to meet post loan and coming out of the pandemic and lockdown. So yeah, it's a case of speaking to your lender, understanding what they need, and then providing that to them.
That's fantastic. It's really useful information there from both of you, Sue and Carol. I mean, I had some notes that I was, sort of questions I was going to ask, but I think you've covered quite a lot of them. One of the things that you've been talking about, Carol, is obviously you're saying you're trying to review all the applications and get through them as soon as possible. Is it like an average length of time it takes, or a minimum?
I think like anything, it's more about what information the businesses have available up front.
Okay.
So, you know, having your historic accounts and your management accounts should be available. Yeah. Bank statements should be available. We're not asking for a war and peace business plan. You know, it's quite concise, brief, you know, just some details and how you've been impacted and how you're going to get through this. And, you know, have your customers been impacted? Have your suppliers been impacted? You know, are you, if you open up the business, are you going to be able to start trading again? And any impact of, you know, external factors, just so we understand, you know, then what your forecasts mean. And for some loans, we might only need cash flow forecasts. For obviously for the more chunkier deals, then we'll require profit and loss balance sheet. And again, we understand that those might show for the next 12 months you're going to make losses, but that's what the loan is for. It's to cover that working capital loss-making situation to get you through to then be able to trade, as we say, normally again. Yeah. But, you know, we've got a number of people within the team that are just working flat out. But because we're part of the Development Bank of Wales as well, if need be, we've got staff there that we can call on if the volume increases further to be able to help us process. So there's not going to be a log jam of inquiries.
Are you expecting a bit of a surge towards
Yeah, I
September?
think because we were late into the accreditation, although we'd worked with British Business Bank, we had to go through the accreditation scheme. By that time, a lot of businesses had got their funding from the banks, but we are finding that the people that have been declined by the banks, or maybe their bank isn't a provider, are coming to us. But I think, yeah, now as we're getting to the end of the scheme, and I think as people are being aware, we might have been okay for cash, but we've drained the cash, and now what we're going to do, it's that planning part now where people are actually back in the business and looking at things, that we think there might be a spike, you know, and another requirement on the loans, either for a first loan or a second tranche.
It's just trying to manage that, the peaks and troughs, isn't it, really? Sue, are there any particular sectors that you're seeing that are looking for any of these particular loans? Is there any, like hospitality, are they?
No, I mean, on your bounce back loans, yes, retail, hospitality, it's quite high volumes. But on CBILS, it's very mixed. I'm sworn I'm not allowed to give out figures, because the Chancellor is going to announce quite shortly by region and actually by local authority of how many businesses and the values. So that's being pulled together, and I have seen some sector breakdowns, and I was quite surprised because there is a mixture. Construction quite high on bounce backs as well. Admin, supportive services, it's a very mixed bag. But construction, manufacturing are very up there, near the top type sectors. And as I said, for bounce back loans, because it's available for a lot of different types of SMEs, and it's quite a quick process and self-certification only required. As I said, that was aimed at sort of picking up a lot of the businesses that probably wouldn't look at CBILS. But as Carol said, there was if I look from the first 2 months, it was absolutely manic. The number of applications coming through, and you will have found a lot of business that will probably have thought, I don't want more than 250k because I don't want to give a personal guarantee. So, but now, as Carol said, you're coming up to the stage where actually you do need more than 250. So that there's lots of different, as time goes on, different scenarios pan out, and people sometimes might need to revisit.
The talk of a second wave and what have you is going to have people considering the future a little bit differently, isn't it? So
and then there's lots of different factors, isn't there? As Carol's touched on, customers, supply chain. Some of these coronavirus itself, it's out of the business's hands really, and it was there was definitely sort of a rush in the first 2 months to apply. And as I said, but now it's probably could be longer term. I think you do need to be sort of looking, will this finance keep me going until probably early next year, middle of next year? Now it's I think it's going to be a long drawn out process, and we will see businesses thinking, I didn't take enough, or I didn't apply. And we are seeing some businesses that are applying that have never actually taken on debt previously. Because they've managed to, a lot of family businesses have been quite reluctant to take on external debt. They've always managed to find a way. And sometimes their own lenders think, well, you've never taken debt from us before, so we're not really comfortable working with you in this sort of, climate. And that's
but it's unprecedented times and requirements, isn't it?
That's why it's good to have sort of FW Capital and others on board who will work with non-customers, and also demonstrate that they can turn things around quite quickly, even though they're a non-customer as such. So they haven't got that, if you're working with your own bank, they've got the track record, they know what you did. Whereas, as I said, Carol and the team are doing quite well in turning things around quite quickly with non-customers.
Yeah, I think with the sort of, again, below 250, because there's no personal guarantees or security requirements. I had a loan sanction last Thursday morning. The offer went out to them by email with all the ancillary documents for the British Business Bank Thursday afternoon. He got them back to me Thursday night, Friday morning, and he had the money in his bank account by close of business on Friday. Now, it had been a process up to that point, but, you know, once we've got a sanction, if it's straightforward,
It's very quick.
within 24 hours, you know, he's got the money and saying, you've just saved 22 jobs here. Thank you very much. We can now get back on site and start, because, you know, he was in a construction sector. He needs to pay his men before he can go and invoice the client, and then they'll be work checked, and then it'll go to invoice, and then they'll have to wait for payment. And you know, they've also that sort of scenario. He needs upfront cash to get moving again.
It's like you say, it's not just saving a business, it's saving livelihoods, isn't it? It's saving people's
and then people's houses and mortgage and you try not to think too much.
Have you had to reject many?
We've declined a few, not a lot, but normally when we're going through the due diligence, that maybe the business has applied and then we find, well, you weren't profitable before COVID, so how are you going to be profitable in COVID? And again, that's where the future fund maybe comes in, that they need equity rather than debt, or that, you know, they may have had a failed business at the end of last year and started up a new one, and then they haven't had sufficient time to put a track record
not got the
together.
History.
And we've had a few that, although we've not declined, they've said, oh, well, we don't want to provide you the level of information. And as I said, it's not a huge ask, but they've decided that they'll look elsewhere or manage on what they've got.
Okay. Sue and Paul, do either of you have any questions at all? Or are you just absorbing everything that's in there? I'm just conscious of time because I know Sue's got another call shortly.
No, it's fine. I can dial in late.
Okay.
I just had a question on what, Carol, you mentioned. If somebody already has a bounce back loan, and they want to take a CBILS, you don't pay the bounce back.
Well,
off.
as part of the NPIF fund, we can't refinance. Whether it was COVID or pre-COVID, that was one of the rules and regulations that was set into the fund. So other lenders can, within their CBILS allocation, there is a percentage that they can use to refinance, and part of that is if somebody was coming to us and had a bounce back loan and wanted a CBILS loan, that bounce back loan would have to be repaid before we released our CBILS loan.
Right.
But as I said, other lenders maybe, you know, can flip it, you know, and
other
pay
lenders
it back.
can do it. You can, but you can't have two at the same time.
Well, I knew. So just the person we were talking about has already got a bounce back loan.
Yeah, so they can go to the lender
but not Carol.
Not unless they've got the money to pay back the bounce back loan. And again, I think they need to check the small print, because we've found when we've been looking at things that some bounce back loan providers have said that the loans can't be repaid within the first 4 months of the loan being taken. Right. So again, it's just check your small print before you sort of start on, you know, applying for something else.
Okay, yeah, I'll mention that too. I mean, it was RBS, they bounced back. So
oh, right, okay, yeah. It was more of the niche providers.
What are you seeing, just out of interest, what are you seeing? It's quieting down in the last couple of weeks, or is it still very frantic?
With me, well, they're still very busy. I mean, lots of people took the bounce back loans. I've not had anybody who's gone for a CBILS loan. I mean, I've got clients who are struggling because they're not making sales, and I've got clients who've gone through the roof because they are making sales. So whichever way they're going, it's keeping me very busy. But I think now it's sort of a, you know, as you say, at first you just took what you could because you know, this is here, we better take it, you know, they're worried. But now I think it's a bit more looking how to be more sustainable going forward and keeping those jobs open. Yeah,
and it's structuring, making sure it's structured right.
Can I ask a question?
Yeah.
I know the interest rates on the bounce back loans, but what's the interest rates we're talking about? You know, borrowing 250,000. What would be the interest rate on that, paying it back?
Right, each lender has got their own criteria. So on the bounce back loan scheme, there is a fixed across the board, I think. So is it 2%?
Yeah, 2.5.
Yeah.
2.5.
If we're looking at a CBILS loan through FW Capital, again, we're a gap funder. You know, if you go into the bank, if they, you know, they're willing to do it, they might provide lower interest rates. But in the main, ours are looking at between 5 and 8%. Whereas in our business as usual model, they were sort of going up at 12+% as a maximum. So we have drastically reduced our rates, but we're still
And what you have
normal.
to remember, Paul, is obviously the government pick up the interest payments and there's no fees
For the first 12 months.
There's no interest, so it's that's why it's been so attractive.
If businesses get through the first 12 months and, you know, in sort of this time next year or maybe at the end of 2021 want to pay those loans back, then they can do. You know, there might be a small early repayment charge levied by each lender, but they're not obliged to keep them. You know, if they then build up their reserves again, that's fine, they can pay them back. And then the government gets released from the guarantee to the lender.
Because we put guarantees in place, there shouldn't be any lender going way up on the interest rates, because we've made, you know, we don't want to put more strain on the business.
But it's not.
So if you so we have put conditions in place with lenders that they can't go over certain amounts.
Okay, thank you.
Fantastic.
It's down to risk at the end of the day, but yeah. Hence the reason why bounce back loans was very popular. You knew what you were applying for on day one, 2.5%.
Yeah.
Fixed. Yeah, no repayment fees.
I'm speaking to a lot of businesses that have not taken advantage of that. I was speaking to one last night actually, and I've told him to look into it, and it is, you know, you can get it within 4 days, can't you? And I think they're just not sure, the uncertainty of taking on a loan.
I think the thing with the bounce back loan, it is 100% guaranteed. So if, you know, if the worst happens, it's picked up by government. So that's why a lot of people did apply for it, because it was 100% guaranteed.
Well, most of my clients applied for whatever they could apply for with a bounce back. Yeah. And I have one or two thought they could pay it back if they needed.
Yeah, I've been very surprised at sort of friends who I know who've actually applied for bounce back, who I would never have thought they would, but they said it was just something that it was sort of, I don't want to say it was too good to be true, but it was sort of, well, because we just don't know what's going to happen, and it might, the government might decide to stop bounce back loans, which that's why I'm pushing deadlines. Yeah. Then I'm going to apply because it's so unknown. It's out of my control, and I want that. I want to keep my staff on, and I want to still be in business next year. So this is sort of a safety blanket. Yeah, because what you've got to think of is if the deadlines come and the schemes finish, then a company then maybe gets a contract to grow, and they go back to their bank, and the bank looks at the last 9 months, 12 months accounts, they're probably not going to read very well. So then they don't fit into the bank's normal lending criteria. So they'd probably say, no, we're not going to lend because of. So yeah, it's probably better to have the cash in the bank ready to go again. The bank is looking at what's next. We are currently working with Treasury on, you know, we can't just stop everything all of a sudden. We are looking at what else we can do after the COVID-19 guarantee schemes. But yes, so it, as I said, it's something to consider now rather than later. A bit of a moving feast. It's all the unknown, isn't it? But, you know, it's great that there's been support for businesses out there, you know, and obviously with the two of you being able to sort of talk about the provisions that are available. All people can do is have a look, see what might be suitable, and like I say, if they get all their paperwork and all the stuff they're going to need
ready and in order so they can submit that application, then,
but as I
we're in
said,
with a
if somebody just wants to have a chat, talk through something, you know, do we think it'd be eligible, then, you know, I'm quite happy to take as many phone calls as required. You know, that's what we're there to try and help. And if it's something that we can't do, we'll try and then look at where else it could be placed. Okay, fantastic. Well, thank you so much, ladies, for your time this morning, and thanks Sue and Paul for joining us and asking some questions there as well. I'll make sure that everybody has your contact details so that you can, like you say, answer any questions that people may have. But I hope you get some rest over this weekend in between all the applications that you're reviewing and all the changes that are afoot. But the key deadlines, 30th of September for the CBILS loan and 4th of November for the bounce back loans. They're the two key dates, aren't they? Yeah. Fantastic. Okay. Well, thank you so much for your time, and we'll speak to you again soon. Thanks for the invitation. Thanks. Cheers. Thanks.
Bye.